the market, either decide if it's going up or down or sideways before we can make an adjustment to our stop. We get now to July the 7th, and on July the 7th, we had a predicted high. That July 7th date, just to point that out, is right in here. It's this candle right here, where we had a predicted high of 73.25. So that means we were buying at 75.25. If you recall, we got in. Let's see, 75.25. We were just right in somewhere, about right in there. You can see that we got in at about the same price, and so it's kind of a wash trade. We were down, we came back up, we might have made just a bit, or we might have lost just a bit, so it's kind of a wash trade. So that brings us more to the current time frame. If we're looking at what is going on with the market, again, we're not doing this on the basis of one indicator, the predicted high or low, but we're looking at the various indicators that are available to us. The predicted difference have moved up. You can see the Darrell index has swung back and forth from 1 to 0. So on a given day, that could indicate the predicted prediction for the typical price in 2 days could be bullish, could be bearish. So that will enter into the start of your trade, but the predicted difference is a little bit longer term. It did start to move up, and you can see it is now since hooked back down a little bit, so that could be somewhat of a negative. At this time, if we were doing the trades as we mentioned before, the situation that we would have is that we would be in the market long at something like 75.25, right in there. The predicted low that we have on July 16th, just a couple of days ago, let's say that predicted low, again, I'm not sure if it's which is exactly, but I'm thinking it's that one. The predicted low 75.73, so minus the $2, 73.73. We're going to abandon this trade if it drops down to that low, so our stop would be somewhere right in the vicinity of right there, and that's kind of where we stand today at 73.25. Again, emphasizing we do not want to lose more than $1,000 on any trade, and so if it does drop down, last I saw of today's price action, it stayed about in the middle of that range. So we're in kind of a sideways type of a market situation, not really getting the best of swings as we had earlier in the move, where the market made a little bit wider range, but still we are looking for the situation to turn maybe back down, would offer us a longer-term primary potential on a downtrending side is kind of the mode that we're looking at right now. And again, that is strictly from looking at the technical indicators that we have available to us, and not necessarily at all the fundamentals or all the other kinds of things that are going on in the market. Just to kind of summarize a bit about what we are looking for when we're talking about the swing trading type setup, and a lot of the things that you saw that we applied here to an oil chart can be applied to other charts as well. It doesn't have to be a market, but you preferably would like something that is going to be having some movement. You want something that's going to swing down and up a little bit of enough of a range to give you an opportunity to capture at least a part of that price move. If we're looking at swing trading, just to kind of summarize it, we're not talking about just an intraday trade, but you can have swing trades intraday. I'm not saying you can't, but we're not looking at necessarily an intraday time frame, and we're not looking at a long-term time frame. We're not looking for a buy and hold type of a situation. So it's essential that if you are looking at a swing trading situation, you need to know what in that market, the swings in that market, what do they look like, and those are the ones you can trade. As we pointed out with the oil example, where we slanting overall trend until May. Enough of a move. The illustration on the right shows you have different kinds of swings. You have the little, ones that are for the little tots with the little protective area, and then you have the ones that are a little bit riskier. So same in the markets. Some of those swings necessarily going to be set up perfectly, but that's what you have to have a plan when you approach trading. And then you want to go with whatever the indicator clues tell you. If there's a clue, you kind of go with it, position yourself, go with the probabilities, and not the guarantees, but the probabilities. You have to be prepared with orders in place if you're going to take advantage of a swing trading type of situation. It's not necessarily something you can sit and think about what it is exactly you're going to do, because things will happen in the market. And suddenly you have the price movement, but you're not prepared. You also need to have protective stops in place. Regardless of where you place that initial order, you want to make sure that it is covered in some way, shape, or form, with options or a stop or something, so that you don't risk a lot of your account, and you want to try to limit your risk. In the case of oil, as I mentioned, $1,000. It could be different if your account is bigger. You can trade more contracts. A lot of things you can do depending upon the amount of money, the amount of time that you have to trade it, and perhaps trade it on an intraday basis, or however you have whatever resources that you have available to you. Also important, as well as getting into the market at the right place, that means you need to when and where you're going to take profits. You may not have a profit-taking plan. You may have a specific target. Again, is a decision that you will have to make, but that is a decision that you should make before you even get into the trade, because the probability is that if you're in the trade and you start looking at it, then you get a little bit, the market goes below what you think it's going to go, or above where you think it's going to go, and that is not a good time to start thinking about when and when. The plan has to be made before you even enter the trade, and then you kind of need to follow through that plan and stick with it. So if you have any questions, that kind of summarizes what I'm talking about with the swing trading type of a trading mentality. Have the information on the screen that you see. If you have, you need to perhaps check out that phone number, or the click here information there. What is going to happen with the oil market, or if you have questions about strategy or anything like that, be happy to take any questions right now. Now, if you don't have any questions, I'm going to ask you a question then. Looking at, again, we'll use oil as our example because it's one of the most popular commodities. If you think oil prices are going to go back to, we'll just arbitrarily say, predict too far out, back to $87, which is the high that they were, to be a move of almost $10 a barrel from where they were the last I saw today. If you think oil prices will go back to $87 2 months, let's say, click on I agree. Remember that little man in the lower side of your screen there is, through there's a little place where you can click on I agree, or you can click on I disagree. So is oil coming back? Is oil going to make a recovery